Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion. He's the CEO and founder of Flying V, Deep Knowledge Investing's digital marketing partner. Robb, the last time we were talking, your wife, Alexandra, was in the middle of running a half marathon. I'm not going to ask you about your week. How was her week?
Her week was actually pretty good, I think. She was very smart and arranged a nice little staycation getaway the day after, which I got to enjoy in that as well. You know, massage, pool, whole nine yards there. Helped her come down from the run, and she beat her goal too. I think it was one hour and 52 minutes. Her goal was 2 hours. So,
All right.
and yeah, she did it in 2 hours, I think 10 years ago. So and this was her first time running another half marathon. So yeah, it went really well.
So she beat her goal time by about 40 seconds a mile.
Yeah, I think she was pacing at like 8:15 pretty much the entire way.
All right. Good for
Yeah,
her.
very impressive.
So,
So,
Rob, when's your next half marathon?
yeah, I don't necessarily have the itch after watching everybody run by, and I think 95% of people. I now, granted, I was posted up at like the I don't know mile 11 and a half, 12, and no one looked like they were having that much fun.
Yeah, well, crossing the finish line's fun.
Yeah, I agree with that. But
All
I was
right.
there for brunch and beers afterwards. So, yeah, but I don't know. Maybe. Never been a big runner, but she might convince me to get involved.
All right. So you ready to go?
Let's do it. So, Gary, today we have the "That's Not What I Said" issue. Great topic. Interested in diving more into that, and maybe if people are putting words in your mouth, which is always fun to talk about. We're going to talk AuthID, family home buying. We've got a guest on for agriculture commodity prices, buy now, pay later, whole bunch of different stuff that we're going to talk about. But moving first, we'll jump right in with Ryan Sullivan and Gary introducing him and our first thing.
All right, terrific. Well, we're going to welcome Ryan Sullivan. He is the founder of Off the Beaten Path Financial, a financial advisory firm. Before we introduce Ryan, I just want to say there are a lot of RIAs, a lot of registered investment advisors, wealth advisors who index everything. They don't really spend any time focusing on investing. You go to them and they have this proprietary 60-40 blend, and they just put everything in the market, SPY, QQQ, TLT on the fixed income side, and they're not really doing that much for you. The thing I love about Ryan and his practice is he thinks about investing. He spends time thinking about how we can help his clients outperform. That's the only thing we're interested in at Deep Knowledge Investing. Ryan, thank you so much. Good to see you.
Yeah, thanks, Gary. I appreciate it. Glad to be here.
All right. By the way, you're broadcasting from your new home, or is that a ski chalet?
Well, it's a little bit of both, technically.
All right, perfect. So, Ryan, you had some thoughts on agricultural commodities and food prices. What's on your mind?
Yeah, well, so just kind of something I was noticing recently was just I was looking at the different commodity indices and noticed that the agricultural ones had been kind of outperforming for the last while. And so, year to date, they've been up quite a bit more than, even precious metals, which I mean, gold has been going crazy this year. And so that was kind of a surprise.
All right. So, one of the debates we've been having, the CPI keeps showing food prices up by like 2%. I don't believe that for a minute. I was on a webinar last week with some really smart people who were saying, no, those are the numbers. You're just getting them confused with 2 years ago. What do you think? Do you believe food prices are up only 2% in the last year?
No, I don't. I mean, you go to the store, you go out to eat. I mean, it's not the same. I mean, 2% is barely noticeable if you're, checking out. But that was kind of why this kind of piqued my interest because, seeing kind of in the day to day of buying food and going to the store and then looking at, okay, well, hey, if these agricultural commodities are really up that much, that's underlying all where food prices come from. And so people are talking about inflation and they're talking about CPI, but I hadn't really been seeing much about agricultural specifically. And so that was kind of where the whole idea came from was, hey, something's going on here. And then the more I looked into it, cocoa had been going crazy this year. And so I think that's been a big driver of this. It's kind of where a lot of it came from.
Yeah, there was a lot of talk on Twitter or X in the last few days about coffee prices being up as well. Talk that it's going to be excluded from the CPI.
Hmm.
So yeah, I think it's a problem for the people who are reporting because you can't tell people, oh, just buy less food.
Well, that's the thing I love about CPI is that as soon as something starts to run too hot, they just take it out, you know. That way you keep the number down and it's more in line.
Right. Yeah, we have perfect investment returns. I just exclude all of our losers from any calculation. Right.
Yeah, Gary, I think you need to start calculating the way the Fed does. That would be, or the government does. That would be absolutely perfect.
I would love to do that. I mean, our returns are already pretty amazing, but they'd be even better if we could just exclude it every time we lost money. Good idea. Ryan, what do you think is contributing to higher agricultural prices?
I mean, I think, you know, there's been a lot of turmoil in the world and kind of some of these agricultural areas. I mean, so you can talk about Ukraine and wheat and those types of things. You know, with the cow, I mean, in West Africa, that's where a lot of the exports come from. I think it's about 60, maybe 70% of global exports come from there. And so there's been a lot of disease and there's been some storms. And so I think, you know, at the end of the day, weather obviously plays a big part in agriculture. And then also just with some of the conflicts going around the world. And so I think, you know, as there's been kind of this transition post COVID from, you know, globalization and relying on all these different countries. And I think this is just another example too, where, you know, having more control over our food supply is going to be more and more important moving forward. And so I think we're just kind of seeing the consequences of this real global world and where, you know, we all kind of bear the weight of these things happening.
Yeah, I think that's a great point. And it's one of the things we've written on over the last couple of years, where in the US, we had basically 40 years where we were outsourcing so much to countries that were producing more cheaply. And then all of a sudden, everybody realized, you know what, maybe we need to pay a little bit more, but we want tighter supply lines and closer supply lines. And that's something we're seeing in semiconductors in particular. And in my opinion, we're going to need to do that with pharmaceuticals as well. I don't think we can rely on China for everything anymore.
Yeah. Yeah, there's a lot of stuff like that that, you know, I think is coming more onshore. And there's obviously, you know, a fair number of opportunities in those spaces as well.
All right. Well, you know, Ryan, one of the other things you wrote about that I like is the idea of keeping some extra stores at home. And for people who are worried about food security, about prices, things like that, it's good to have some sort of store at home. And, you know, my view on it is worst case scenario is a couple of years from now, you have some, you know, extra tuna fish and chocolate that you need to eat. And, you know, it's probably okay. Maybe get a little coffee too.
Yeah, definitely. Yeah. Now might be the time. I mean, it takes a little while for these commodity prices to kind of follow all the way through the supply chain. And so, you know, I don't think we've really seen the full impact of this at the store yet. So if you're into coffee, you're into chocolate, you know, now's the time to probably stock up. That being said, I mean, it's never a bad idea to have some supplies on hand, and you can look at it as a hedge from the standpoint of, you know, food prices are semi-volatile. And so a couple of years ago, we had a pretty big spike in things. And so to be able to kind of weather those storms to a certain extent by having, you know, a couple months worth of food on hand allows just another level of diversification. And so I think, you know, when we talk about investing, we're really focused on you know, maybe stocks, but there's a lot of different ways you can be diversified across the board that all impact you financially.
All right. Sounds good. I like those ideas. And I always love the way you think about investing, Ryan. Ryan Sullivan of Off the Beaten Path Financial. Thanks so much. And we'll look forward to catching up with you soon.
Thanks, Gary. Thanks, Rob.
All right.
Thanks, Ryan.
See you
Have a good
later.
one.
All
Awesome.
right.
Yeah, Ryan's a great guy. Be sure to check out Off the Beaten Path Financial. It'll be linked in the written version of the 5 things, as well as in all of this content that we're producing. Be sure to check him out, give him a follow as well. Moving into, Gary, the rest of the 5 things. First one, really excited to talk about. If you've been following Deep Knowledge Investing at all, had a new report that went out over the past week or so. Thing number 1, AuthID. Ticker is AUID, and the case for biometric security. Gary, what do you like about this play? Tell us more about it, and let's dive into it.
All right. So last week, I talked about getting suspended on Twitter or X because somebody impersonated me. Rob, you had the great line that I'm micro famous.
I need to trademark that.
Yeah, it's a good one. We like that. And here's the thing, it ended up okay. You know, Twitter support, they were good. They were really good. They were very responsive and got me back online in about 12, 14 hours, something like that. but it took hours of my time, and I missed a space that I was supposed to be on where I was one of the featured speakers. And, these things are really disruptive. And so, the question is, wait a minute, why aren't we securing? Why can't I secure my identity? How is it possible for somebody else to use my name, my firm's name, my logo, my image, my photo, right? Why can't I secure this? And it's something that should happen. And so, for people listening to this who are thinking, okay, but it's your Twitter account. How big a deal is it? Okay, fair enough. But what if it was your bank account? What if it was your brokerage account? What if somebody faked your identity? And so I think biometric security is going to be a huge growth area. And it's coming up really quickly. And one of the things that I thought was really interesting is some of the detractors. There are some people who are short the stock, and go check out their case on that. But they said, nobody's using this, therefore it has no, nobody's using it. Who cares? And, yeah, I suppose that's true, but they will be using it. It kind of reminds me of, at some point I was talking to my dad, and we were talking about online education. And he said, yeah, I don't think it's ever going to be a thing. I don't think people are going to study online. I said, Dad, why do you think that? He said, well, no one I know did it. And I said, Dad, you went to college in 1958. Right. So, and we had a laugh, and my dad's a smart guy. He really is. But he was sort of viewing things just from his immediate perspective. And so, there are people saying, well, nobody's using this now, but they will be. And that's, I think, going to be a very fast growing market. And AuthID has a best in class 0.7-second authorization process. And so, you put the phone in front of your face and get it in the oval, and in just over half a second, you're verified, you're authenticated. And that's very, very hard to fake right now.
Yeah, I think you even see it nowadays. I know I've had to do a few things with banking, even uploading your passport or your license ID and then taking photo of your face, right, to just validate with that facial recognition here. But you're exactly right. The next best thing we have currently is your LastPass of the world, or 1Password, right? The problem there, though, is once that gets compromised, then you've just opened the entire floodgates to absolutely everything that is in your account. Gary, I read through the report. There's a lot of information in there. I know we're talking about a company that, from a meaningful revenue standpoint, probably not until next year.
Right.
What's one thing you would call out or highlight more than anything else that's in that report, just for the sake of the viewers here? And then obviously be able to go and read that report online if they want to dive even deeper.
Yeah, so for people who want to read it, you can go to the Deep Knowledge Investing website, click the research tab, and it is not paywalled. You're more than welcome to read it. Also, Rob, you make a great point. I know the shorts have been pounding on this idea that the company doesn't have revenue. Yeah, it is basically a public venture capital company. There won't be meaningful revenue until next year. So now we know that. I think there are 3 near-term catalysts, though. These are the things that I think we're going to see over the next 6 months. The company reports earnings on Wednesday, and I think we're going to see them improve their financial metrics, the way they report. We're going to get more clarity on their contracts and what is contractually an obligation and what's an estimate. I think they're going to do a better job reporting. The second thing we're going to see is, I think we're going to see a successful financing of the company. They do need to raise money this year. I think they're going to be able to do that. And then the final thing this year, we're going to see, I believe, some contract announcements. They're going to start signing some customers. And if that happens, I think the stock will move in a positive direction. Certainly as a public venture capital company, it is a risky investment. But think about it this way, you're risking $1 on it, and for the opportunity to make $10 to $15 over the next 5-6 years. And so what we titled the report was, it's a skewed return distribution with huge upside in a growing market. Basically what that means is, yeah, you can lose money in this, but you could make 10 to 15 times your money if things go well.
Great stuff, Gary. And as you mentioned, check out deepknowledgeinvesting.com. This is not paywalled, so anybody that may be listening that wants to gain access to that report and download, review the entire report, it's readily available on the Deep Knowledge Investing website currently. Thing number 3, Gary, we're going back to talking about Congress and Wall Street like we do quite often. Should Congress stop Wall Street from buying all the homes?
Yeah, so we're gonna round of applause for DKI intern Andrew Brown, who was the one who suggested this particular thing. Andrew will be back on camera with us next week. He's studying for his stats final tonight. Good luck, Andrew. We know you're gonna do well. But basically, Rob, home ownership is a core part of the American dream. And I do think it's important. I own my own home. My parents did, my grandparents did. I think there is something about having your own place that really matters to Americans. And it has been a way that people have built wealth over time, or at a minimum, you can insulate yourself from rising rent prices. You control your own home. And I think that's really important to people. And so there's been a lot of panic, understandably, about an increase in big Wall Street firms that have effectively unlimited access to capital, buying up thousands and thousands of single family homes and pricing people out of the market. And so lawmakers in some states, as well as Congress, are considering legislation to either force these companies to sell their existing inventory or to tax them differently, imposing additional taxes on them, and basically make it more expensive, difficult, or impossible for these corporations to buy up large amounts of housing stock. And that's what people are focused on right now.
Gary, tough situation here. DKI, I think generally not a proponent of government intervention. Again, we've talked about this in the past, though. Seems like a great position for the asset gatherers, right? Or the older generation that do own these homes. And why should they be penalized for selling these homes to anybody but the highest bidder, right? But at the same time, young people, once again, right?
Yeah.
What do you think? What do you think's going to happen? What is your take? What should be done? What will be done? I know it's a tough situation, tough call here.
I think this is a really hard one, Rob. And it's one where I don't necessarily have clarity. Normally I'm a pretty opinionated person. Most people in this business are. This one is really tough. On one hand, I understand that no individual in their 20s or 30s are going to be able to outbid these big firms with massive access to capital. And I don't think seeing a few large investment firms turning a huge percentage of the American public into renters is a good idea. I understand the case for more government regulation. There is another side to this one as well. One, forcing companies that own assets to sell them in a fire sale isn't necessarily a good precedent to set. More importantly, we're used to thinking about this from the point of view of the young people who want to buy. And it's important to consider their needs and for them to have the ability to own a home and start their lives and be financially secure and start families. And I think that matters. But there are people on the other side of this as well. Now, imagine you're a homeowner and two people come to you, and one person says, well, I will pay you a certain amount for your home. And the other person says, I will pay you more. And now imagine the government saying you can't take the higher bid, right? It's not just money out of the young people's pocket. Right? You're also taking from homeowners and telling them that, you can sell to certain people, but you can't sell to other people. And once you start thinking that one through and taking that language, right, you can sell to these people, but not those people, you end up in a really not so good place. Beyond that, I'd also point out that there are some misleading statistics floating around, Rob. There have been rumors going around that these large corporate buyers have bought up more than 40% of the housing stock, or that they're, 40% plus of sales. This is not true. We've got the graph on this. We have the chart from Freddie Mac, which is actually a credible place to look. And, what you're looking at, institutional investors are about 2.5% of the market. And iBuyer, which would be, another kind of corporate buyer, is I think under 2% of the market.
Listen to.
Yeah. So look, I think this is going to be a tricky one. It's a nuanced issue. I don't have a clear opinion on it yet. But it is important to point out that things have not gotten as out of control as people are making it out to be. It's not 40%. It's a few percentage points of the market. I do think that these large firms should be careful. If they start to be too large a part of the market, they should expect that they're going to have unpleasant regulation coming their way. So this might be a place where the large firms could exercise a little self-control, a little self-regulation before this has to be done through legislation.
Thing number 4, Gary, as we're moving along on this week's version of the 5 things, the quotes, shocking stress of buy now, pay later.
Yeah, so this has been something that we've been talking about a lot in this space on the 5 things. We've talked a lot about buy now, pay later. And, it was kind of funny when people were putting, like a McDonald's Happy Meal or a Big Mac on buy now, pay later. That's, that was kind of funny. And then a week or two ago, we were talking about the dangers of people using these products for their monthly rent, and how misleading that marketing was. Acting like people paying fees to pay their rent late is somehow financial freedom. And so, it's been framed in a really misleading way. But there was a survey done by Harris last week. And Rob, listen to some of these, the impacts of buy now, pay later. They interviewed people who are using it. 54% of people spent more than they could afford. 34% worse off financially. 31% were surprised by how much they owe every month. Don't ask me how they borrowed money and then they're surprised that they owe money every month. 28% are falling behind on other lines of credit. 27% have gone into significant debt. Almost 1/4 of people report that their spending is out of control. This is not a good thing. This is a huge problem.
Yeah, I mean, it seems like the one answer is spend less, right? But you're pointing out an issue that people just have no clue of what it is that they're actually spending on. I think another thing to call out is we already see in reports the all-time high that is credit card debt, but with the BNPL, that's not even accounted for in that statistic either.
Yeah. So, Rob, you bring up 2 great points. One of them, it's really easy to say to people, we'll just spend less. The problem is, people have a certain amount of fixed expenses. And, when all of their paycheck is going to their rent and to put gas in their car so they can get to work, for childcare so somebody can watch their kids when they go to work, you have to feed your kids. Like, people may not have a ton of flexibility. And so, it can be really insensitive to say to people, we'll just spend less. And they realize, wait a minute, we don't have a lot of room. And inflation has been really tough on people. From a finance point of view, from a macroeconomic point of view, certainly people have been concerned that consumer credit has hit an all-time high. I think we're around 1.2 or 1.3 trillion dollars right now. That's a really big number. The thing that concerns me is that buy now, pay later is not reported the same as other kinds of credit, meaning there could be hundreds of billions of dollars of buy now, pay later debt. That is, here it is, 28% of people are saying they're falling behind in other lines of credit. It's not being counted as household debt. And so my concern is that things for a lot of families and for the aggregate indebtedness of the country may be worse than people think it is.
Yeah, scary situation, and one that I don't know what's going to happen. I don't think you do either. And it's going to be an interesting and maybe rocky road over the
Yeah.
next 12 to 24 months.
Rob, I agree with you. And, the really hard thing is I know it's just really easy to say to people, spend less, cut back. But, sometimes I talk to people or read stories about people and they don't have anywhere to cut.
Right.
What do you do? Like if they have 2 kids, would you like say to one kid, I'm sorry, we can't afford you? I don't know how you do that. And so inflation has been really hard for people. And one of my biggest complaints with the way our government is handling things is we used to handle these things through taxation, which forced people to have conversations because you had to write a check at the end of the year, or saw that money taken out of your paycheck every week or every month. Congress now has decided they're going to fund our country, our government through inflation. And so we just see the government debt going up. We see the treasury monetizing this debt, creating dollars to pay for it. And that's why everything's getting so expensive. And so the truth is, it's kind of funny. We're saying, how do we solve this? This is one of these things where I don't know that some of these American families may not be in a position where they can cut spending, but Congress should cut spending. They're not going to, but they should. And that's the thing that would create room for people and make it easier for these people to breathe. And that's what has to happen. I'm not optimistic that they will do the right thing, but that's the number one thing they could do to create some space and some breathing room for these families that are really hurting.
Yeah, it's just it's a vicious cycle in the sense of you talk about your fixed costs. Now all of a sudden your food costs go up by X% number, your insurance costs go up X% number,
Right.
and yet wage growth doesn't nearly match what it needs to be. And so here we are, and it will be interesting.
Yeah,
Thing number 5.
and
Yeah, go
people
ahead, Gary.
no, you're right. And people keep saying, people in finance keep saying, yeah, but they got pay raises. Yeah, but they got pay raises of 4 or 5%, which isn't bad. But when they tell you inflation is 3%, Rob, do you believe that number? I don't.
Yeah, right. We've talked about that ad nauseum, right? And just you see that inflation number, cost of living, depending on where you're at in the country too. And then the answer is, well, just get up and leave. Talking California. I know you're in
Yeah.
Connecticut, New York, probably a lot of that happening there too. But for some people, just getting up and leaving isn't necessarily an option. And so, yeah, it's just so difficult. And then we see jobs reports coming out that's saying, oh, well, we're increasing jobs. Well, in reality, no, people are just having to work more jobs because their regular job isn't paying the bills.
Yeah, the real answer to this, I think, is not for people to lecture the American families and tell them, just spend less, just stop spending. I think the answer is for Congress to spend less, and that will create less inflation, and that'll give people room to breathe. I think that's what has to happen. Again, I'm not optimistic, and we had that great thing by Mike Shedlock, Mish, economist on the DKI Board of Advisors a couple weeks ago, who made the point, we're not going to be able to vote our way out of this. Whoever wins in November, they're not going to cut spending.
I will not be holding my breath for that. That's for sure.
Yeah.
Thing number 5, Gary, misunderstood posts and straw man arguments. I think we're definitely jumping maybe back into Twitter and some he said, she said, and let's clear the record.
Yeah. So, Rob, again, you joked I'm micro famous, and it's part of that is, I post some of these things on Twitter, on X, and people get upset. I understand. We talk about a lot of things that are really upsetting. The financial condition of this country is not fantastic right now, and the people in charge are doing things to make things worse, and that's a bipartisan problem. But we point this out, and people have taken issue. Recently, I've gotten some interesting hate mail from people who didn't like my post, noting that work from home was creating a problem for the owners of office spaces, those landlords, for posts where we've shown that government debt was increasing faster than GDP, for saying, hey, our government spends too much. And, I got accused of trying to force people back into the office. I was accused by somebody of donating to President Trump's campaign. That upset them. And I was accused of trying to get tax breaks for billionaires. And so let's set the facts straight, right? I work from all over the world, and I am on record as saying deep knowledge investing will never have an office. I think people should work from wherever they want to. And I'm somebody who's living that work from anywhere lifestyle. I have never in my life donated to a presidential campaign, either party. And my view is that billionaires have plenty of influence and lobbyists and don't need my help. I'm saying Congress should spend less. I haven't tried to change, anybody's taxes on this. But these guys, they have plenty of lobbyists and representation. They don't need me to advocate for them, nor have I done so. So, what in the world's going on here?
I think one of the things that stood out to me when we first started to get acquainted, Gary, was you talk about my job is to help people make money in the market, regardless of what the market is. You're not going to have any control over outside of, okay, you may have an opinion, right, of who the president is, who's in Congress, what decisions are going to be made. And I think you did a good job in the takeaway highlighting some of those things that show, hey, at DKI, our job is to take the facts, try and understand the situation, and then make a recommendation to make money regardless of what the situation may be.
That's right, Rob. And it's my job to figure out what can go wrong and come up with strategies to protect deep knowledge investing subscribers and clients from these bad things. The fact that I observe certain economic problems and come up with strategies to make money from them, or come up with strategies to help people protect their portfolios, their homes, their retirements, their financial situations from these bad things, that doesn't mean that I'm in favor of the policies that cause the problem or that my analysis caused this to happen. I don't have that much power. right? I don't have the power to change it, and me observing something doesn't mean I'm in favor of it. It means that I see a problem and I come up with a way to protect people from it or to make money from it. I position my portfolio and I help other people position their portfolios to benefit from these situations. Again, that doesn't mean that's what I want. It's not my preferred policy. That doesn't mean I'm cheering for it. And even if I were, and I'm not, I don't have the power to make these things happen. You know, Rob, a couple years ago, Deep Knowledge Investing pointed out, we were in November of 21, and we figured out that massive government spending was going to lead to the inflation we've been experiencing the last few years. And I recognized this early, and I told DKI subscribers that I was buying Bitcoin, gold, energy, meaning oil and uranium. They've all been hugely profitable investments. And none of that means that I'm in favor of too much government spending, that I want to cut your favorite government program, or that I can change the practices of our government. And so, you know, angry people, you can type angry things hidden at your keyboards. But at Deep Knowledge Investing, we're going to stay calm and cerebral. We're going to do a lot of original research, and we're going to try to make money for our clients and our subscribers, regardless of market conditions or governmental policies.
Great stuff, Gary. This concludes this week's 5 things. Thank you so much for anybody tuning in, watching our YouTube shorts, social media, wherever you may be coming from within the globe. Please visit our website at deepknowledgeinvesting.com. As we mentioned, that depth report on AuthID is on the platform, not paywalled, for access and visibility there to dive into. A lot of great information, as well as be sure to grab a free subscription, free to subscribe. You'll get notification on new content and information. Some of that may be paywalled for premium subscribers, but you'll at least know the volume of content and information that we're putting out there on a regular basis. As always, thank you so much for tuning in. We really appreciate each and every one of you, whether you agree or disagree. That's what really makes the world go round, and this discourse is great. And we encourage more of that discourse, questions. Gary, I know you do a phenomenal job in making a point of emphasis to answer questions that people have or provide clarity on points that may need more clarification. So, Gary, great job as always. And any closing thoughts from you?
Yeah, thanks, Rob. And I think the last point you made is a great one. For anyone listening to this, you're more than welcome to disagree with me. My only rule is just use the word because. But if you're going to disagree with me, disagree with the thing I'm actually saying. Creating a whole bunch of straw man arguments and arguing against something I never said is not going to be effective. It's not persuasive. I've also noticed some of these people, like, they'll get their shot in and then they'll block me, which, you know, is the kind of thing, you know, a second grader would do. You know, somebody runs up, they punch you in the back of the head and they run away. You know, it's, if you want to disagree with me, put it in the comments. That's cool. We'll engage. You're not sure about something, ask a question. We're here. I check this account every day. So, you know, we're happy to have the engagement. Just, you know, explain to me what you're thinking, and we'll look forward to talking later. Thanks.
The Tough Life of Being Micro Famous by Gary Brode.
Thanks, Rob. And everyone, thanks for watching. We appreciate your time. We know it's valuable. Have a good week.
Thanks, everyone.